Oh, my bad. I didn't know I was still LFG. I didn't know I was still on mute. All right. So let's go ahead and interpret this report and see how the market's reacting going forward from here, right? So first off, this morning we had this, we had the market gap up. Pretty strong day yesterday. Market gapped up, and the report came out, got spanked, right? S&P just sold off hard, came back up, retested. If you're a trader, you know what this is. Retested the highs, got eliminated, and we came down. But we had a strong rebound so far. And if we go to the bigger chart, you can see that big wick off of the, I'm not sure if everybody can see this. Look a little deeper. This is VWAP. This is anchored VWAP from the Fed meeting. Okay, this is the Fed meeting, anchored VWAP, big capitulation, buyer stepped in. Why? If the inflation report was so bad, you guys should be able to hear me now. Let me know if you can hear me. If the inflation report was so bad, then yeah, let me know if you can hear. Why are we moving up so strong? And that's what we're going to get into. Why are we moving up so strong? I want to make sure everybody could hear me first before we get into it. How's the sound over there on Instagram? Give me a thumbs up. Give me a thumbs up. I know Instagram is still having some bugs. It should be working now. You need to sell SPXL. Any ideas? We'll get to that. Let's go over this first so you can get some context to what's going on with the market and why it's reacting the way it is. Okay, thumbs up. Good. All right, so let's get into it, right? So basically, S&P, sold off on the inflation report, higher than expected inflation. CPI headline, both higher than expected. And what do we see? We see the market sold off, pre-market, came back up, retested, fake out, right back to the lows. Then we got a big bounce, very confusing to most people. So let's go over this. Why is the market responding so positive after the report? And I know it could be tricky, but let's go ahead and jump into it, okay? All right, and if you got questions, let me know. But I'm going to get through this. I don't want to waste nobody's time. No, this is our first slide. Okay. Move this in front. So here's what we got going on with the CPI report. First and foremost, let's start off with this, okay? So we talked about this yesterday. What is this? This is basically CME tool, Fed data. What is the market pricing in for March? Everything's about rate hikes, okay? Keep in mind that the market is now looking, the market is worried about when the Fed, what is the timing of hikes? What is the timing of Fed rate hikes? That's what the market's worried about right now. What is your time? Are you going to wait too late? Are you going to wait till it's too late and the economy rolls over, earnings roll over, and growth decelerates too fast? Or are you going to cut rates? So yesterday, we were at a 64% probability that they cut rates in March. And then today we said, let's wait till after the inflation report comes out. If it comes in too hot, then the probability of a rate cut. Hopefully I said cuts. I keep saying hikes, cuts, whatever. It's cuts. We're talking about cuts now. Okay, so if the inflation report comes in hotter than expected, the probability of a cut should actually go down. But we saw the opposite for March. We actually saw the probability of rate cuts go up. Now, not tremendously, but it didn't really change. How is that? Why is it that inflation was hotter than expected, but the market is pricing in a higher probability of cuts, or just about the same? Okay, well, first, let's go through inflation. Headline came up 3.3. So it went up slightly, right? Slight bump higher. Holiday spending. Okay. And this is the key here. Holiday spending. The Santa Claus rally was people would spend in November, in December, right? For the holidays, they would travel and, consumption would go up. So we saw that. It did bump up a little bit, right? It did bump up, but that is due to holiday spending. Small bump up. We're going into January now. Transportation. These are the hot reads so far. Transportation up 9.7%. That's actually down from the last reading, but it is still up. It's still pretty hot. Shelter 6.2%. We want to see, something below 4, 3, 5, 3. We want to see the 3s. So these are all pretty hot. Food away from home. This is just eating out, right? People ate out a lot, including myself. Spend more than you actually want. You're not going to spend like this all year, obviously. Okay, you're not going to spend like this all year, obviously. Overall CPI 3.4, not bad. Electricity 3, food at home. Right, at home is a little cheaper. Obviously, things are coming down. New cars. Now this is deflationary. All this is negative, so it's deflating. So we got now here's what I got this marked. Transitory. Why? Because transportation is transitory. I'm not saying it's going to zero, but it's not going to tick up. Are you going to travel more in January? This is all readings from December. Are you going to travel more in January than you did in December? I don't think so, because you were holiday, holiday visitation. Or, I'm sorry, it was a holiday season. Everybody's visiting relatives, whatever it is. You're driving, you're taking a plane, right? And airplane fares are ridiculous. They were absolutely ridiculous. So you're not gonna spend that much. That consumption will come down in January. Nobody is doing that. Shelter, that might be sticky because there's just not enough supply of homes. We need more homes. Even though it is decelerating, it's still falling, but it won't fall at a fast pace. Okay, food away from home, this falls. I think this is gonna fall pretty quickly. Again, most of you, give me a thumbs up if you're gonna spend more in January than you did in December and November. I don't think so. Give me a thumbs up. I don't think so. You're not going to see that because most people spend the most at the end of the year, right? So I think this comes down. This is what the market is looking through. We said this yesterday. The market might look through a hot inflation print and say, well, duh, December is holiday Santa Claus rally spending. January will be slow because everybody has to pay their bills back, right? You got to pay back those those credit cards. Got to pay back that debt. So obviously, transportation services, the hottest by far. Everything else is low. Everything else is falling. Energy, apparel, used cars, they ticked up a little bit, but new cars ticked up a little bit, but everything's pretty much in line. It is the transportation services. Your insurance premiums are ridiculous, right? It's bad, but there is progress being made. So this is why, or this is one reason the market might be saying, hey, you know what? Hold your horses there. We're not, it's not that bad. And I'll get to your comments. Let me just get through. This will be quick. We won't take up too much time. Core. Okay, well, first of all, core fell. This is what the Fed is focused on. Core inflation actually came down. Is it falling fast? No, slow fall. This is excluding or taking away food and energy. Inflation is still falling. Core is still falling at a slow pace, but it's still falling. There's still progress there. Great. Shelter, still rolling over. This is obviously housing is a big part of CPI. Really big part. It's still falling. It's still high. It's at 6.2, whatever it was. Still pretty elevated, but it's falling. So you are getting price progress there. Long way to go. These are normative levels. So we still got a long way to go, but the market wants to see progress and we are getting progress. Okay. Yeah, it was hotter than expected, but then why is the market pricing in, hey, we're still seeing cuts at the same pace? Because the progress is still there. Also, the macro forces, this is where I'm like, hey, wait a minute. The dollar's not rising off this hotter than expected inflation report. So you didn't get the dollar spike. Now, keep in mind, we can still spike tomorrow. We can still, we'll see PPI numbers, producer prices tomorrow. But, we didn't see the dollar go up and we didn't really see rates go up. They stayed flat. So dollar rates stayed flat. The bond market didn't see, we'll say this is risk on, risk off, right? Risk on if it goes down. If it goes down, risk on. If it goes up, risk off. But nothing changed. It was flat. The market is still digesting these numbers to say, wait a minute, are we going to freak out because there was a bump higher? Duh. Everything, it doesn't just go straight down. There's always these bumps higher. Holiday spending, Christmas is done. Consumption should come down. And the bond market, on the other hand, said, hey, I don't know if that's enough to really sell off my bonds. Is that enough to say there's no chance of recession? I don't think so. That's December is your last high print for consumption, right? Most people were not working, producing anything. They were spending money, not working. So you're going to get more inflationary pressures a little bit. The bond market didn't bite on it so far. Maybe maybe it turns tomorrow. We'll see. But that's what we're looking at here. Yields are flat, dollar's flat. We're not really seeing much. The market is starting to recover, and we'll keep updating this, CME projections or with the, probabilities of rate cuts with the market is let me see. Maybe it changed. It was changing throughout the day. 68. Wow. So at the end of the day, right, what do we got? Like 45 minutes left. The market is pricing in a higher chance of cuts after a higher than expected inflation report. So why? Because we're still seeing progress. It was a small bump in the road, nothing too crazy. It's mostly transportation. And I think the key here is, December was your hottest read. You're not going to get hotter than December over the next couple months. February, Valentine's Day, are people going to spend for not as much as Christmas? Are you going to spend as much for spring break, maybe a little bit. No, not as much as Christmas, not as much as the holiday season. So I think that's it. I think that, and of course, trading is going to be different. We're not going to just go straight up or straight down when it comes to the market. But I think this actually might be a nice short. I don't think we're gonna go much higher. There's a lot of resistance here. I would be shorting this. Let me not say it out loud. And we got a lot of Fed talk. We're gonna go over Fed talk also after I get through your comments. But I think, wait a minute, we missed a slide. We missed a slide. Hold on. I think we missed a slide. Did I not put it in here? Where's core? I guess I did hit it. It was services X shelter. I guess I'll just pull it up. Damn. Guess I missed it. All right, we'll go to your comments. I thought I put it in there. I was in a rush watching the markets. Let's see. Here it is, super core. Okay, super core. You guys probably don't care to see this, but super core inflation. So this is taking out housing, right? This is what the market or what the Fed is really focused on other than housing is consumer services X housing. And I saw a couple other reads that were hot. So who knows what the data is, but you take out housing, you look at all the services, it's rolling over on a year-over-year basis at a slow pace. So we're slowing down. It's at 3.4, 3.5, right? Nothing too crazy. So I think the market's digesting this as, okay, wasn't the best, but we can still, we're not going to collapse because of that inflation report. One bump higher, we're not going to collapse. And I think we might be moving sideways for a while though. Yeah, we had a nice move off of the 10-day moving average and VWAP, but we might be in this range. We'll see what earnings season brings for us. All right, let's hit these comments if you have any. Volume is low. HROD. Oh, volume is too low? Okay. Well, that's unfortunate. Let me check the volume. Is volume low for everybody on here? That's weird. Let me throw it up a little bit. Hello? Check. Always something different. All right. Well, I'll put it a little higher. I have a picture of right after CPI and it went to 73%. Okay, Veronica Martinez, not sure what you're talking about. I am frugal. That's the path to wealth, frugal, right? I have a picture of it in 73%. Oh, you talking about volume? Market volume? Okay, yeah. What's up with PPI data? I'm not sure what you guys are talking about. Just let me know. Be a little more clear. I'm not sure what you're hinting at. What's up with PPI data tomorrow? I don't know, Jervine. I'm not sure. I mean, when I look at it, I think it's possible the dollar is waiting for that PPI data, right? Because it didn't react, and I'm still waiting. I'm like, wait a minute. The dollar should have went up on that hotter than expected read. It just didn't. So maybe it needs more, or maybe it needs PPI to go higher, producer prices month over month, year over year. But still, I think, it's might be more possible that the market is looking through this print because it knows this was December. So the next print's going to be lower because nobody's spending in January, right? Those transportation fees, your flights are way cheaper. Just go look up any airfares for January. They're much cheaper than December. So I think the market's looking through this. You need more than just one uptick in inflation also. And we do have some Fed speak. Maybe that turned the market around. We'll check that out also. And then oil, you're not seeing a big spike in oil. Oil still, PPI is not going to go up much if oil sticks down there. Nat gas, right? And if PPI is producer prices, so you're going to look at commodities. Nat gas had a big run. Maybe that does push up PPI to some degree. I don't think it's as big as oil. Copper's still pretty low. Wheat, still pretty flat, right? 10-year yields, 5 years rolling over. So the bond market's not reacting. We anticipate 0.1. We'll look into that. What up, Troy Sandler? All right, so what'd you say? He might have meant the trading volume is low. H-Rod, I think I know who H-Rod is though. I don't know if he's ever looked at trading volume. I think I know who that is. He might be, if it's trading volume, that is actually true also. There's not much volume. I'm looking at the, up here, this is RVol. You can't really see it. Why is it in the way all of a sudden? Anyways, RVol is at 69%. Relative volume for the day is pretty low. So maybe the market's looking for earnings. Maybe it's looking for, bank earnings as a signal. JP Morgan, it wants to see a little bit more on the credit card data and their net interest margins. More Fed speak. We have Kashkari tomorrow. That's probably one of the most hawkish Fed members. He's usually pretty hawkish. And he's the one who last said, who mentioned in the last report, hey, we're seeing a lot of progress on PCE 6 and 3 month annualized. Those also ticked up a bit. 6 month annualized was down to 2.9 and it went up to 3.2. So they all bumped up. Everything bumped up. The question is it a bump in the road or is it a change of trend? I don't think you get a change of trend unless oil goes significantly higher. All right. So yeah, all the inflationists, you're going to see a lot of perma bears saying inflation is high. Another funny thing is people say, well, inflation is, we'll go over QQQ. They say inflation, the numbers are false when it's lower, but if it's higher, they're real numbers, right? So you got to watch out for, politics, political rhetoric. Might get a rejection here on S&P in the day. I think we still have one more. I think we're going to gap down before. I don't know what we're going to do, but I sniff out we have one more. I don't think we're just going to break out yet. I don't know, because those numbers are still pretty hot. You got to get over this level. We need to get, and this was the gap up early morning, right? You still need to get over this level. Until we get above this level, this just tells me there's still buyers. It wasn't that bad of a report, so we're going to come back up. But it's not great. We're not going to break out to all-time highs yet. Maybe if the PPI comes out super low. I'm not sure. All right, so QQQ, yeah, we'll switch over to QQQs, see what it's looking like. So basically, yeah, the inflation report was worse than expected, but I think the market has, the market is a bunch of minds put together. The participants are pretty smart and they know, hey, look, January set to slow. So we're not seeing any significant changes there. And we're going to listen to Fed Mester, one of the Fed governors. And she talked a little bit about, her reaction to the report. Same thing with the Q. Did SPY not get above? Oh, no, it did. Okay, so the Qs are above VWAP. We got above VWAP. I think we're just trading in this range for now. Nothing too significant yet. Bearish CPI data, still not enough to take down stock market. Greed and rate cuts, bet narratives, that's priced in. Yeah, and I'm pretty sure everybody, the market kind of says, hey, look, we knew December data would be kind of hot. Right? Everybody expected it to be pretty hot. And core is still falling. What up, Fibonacci Poppy? Core is still falling, bro. So core inflation, just wait till we get PCE core PCE on, I believe it's January 31st. If that keeps falling, it's going to be very positive for the market. So, hey, I thought we'd be sliding lower, but we bounced. And the key here is this. I said yesterday, watch the dollar, and it did try to make a move higher. It just couldn't. It couldn't follow through. And I was like, wait a minute, the dollar can't follow through. I don't think the market is going to really sell off like that. The dollar just can't follow through. 10-year yields cannot follow through. As a matter of fact, they're making new lows on the day. So bonds are being bought up still, right? No scare of they're not afraid of this. Would be going up if inflation was a concern. It would be going higher. It's not. I see you over there. What's the difference between PPI and CPI or GDP? So PPI is basically your producer prices, and we'll throw that up here because we get that in. We got that coming in tomorrow. So PPI is your producer price index. Basically, what are producers paying to run their businesses, right? To run business. What are producers paying? CPI is consumer price index. And there's all kinds of different ways to measure it. You can look at the month over month data. That's more of a, it's like looking in the mirror. What are we looking at month over month? And then the year gives you, so this is month over month. It ticked up pretty high, right? Back to where, not super high, but back to where it was the last month. I still don't think that's too crazy. You'd have to make a new high. And it's all transportation services, right? It's not nothing systemic. I guess you could say that is systemic. I don't think it's that systemic. So that's month over month. But the year over year gives you the trend, and the trend is lower. You know, if we pull back on the map, it's bouncing a little bit, but I mean, if you were going to go higher, that would have had to been, you would have had to gone much higher for December, this print, because we're going into a slowdown. January, February, March is a slowdown. So I think that's it. I think this was the last bounce higher, unless oil prices start to spike, and I don't think we're going to see that either. So yeah, consumer prices are our CPI's consumer prices. PPI we get tomorrow. Here it is. I'll go to the PPI year over year. This is producer price inflation. Now this was almost negative. This is almost negative, right? So this is another reason why profit margins, meaning the revenue that companies are able to retain, might be higher than expected. Revisions came down. And that's simply because I think core wasn't negative? I thought PPI went negative. Core is at 2% though. Core PPI, core producer prices, X energy, X food, they're falling too. So pretty good outlook there. Oops. Guess I went a little crooked here. For the TikTokers, it's kind of hard to track everybody. So yeah, I think we're looking good. Do I think PPI will stink? I don't know. Just watch the dollar in the morning. We had a sharp rise, then it came back down. But I think the market's still more worried about CPI than PPI. So I'm not too concerned. What's up, Jessica Lively from Twitch? Yeah, I can see your chat. What's up, Twitch? We got a Twitcher on here, right? Twitch. Also, Amazon. Oh, is it Amazon that owns Twitch? I saw yesterday Amazon is cutting. They're saying they're making no money on Twitch. So they might cut Twitch. They're cutting workers for Twitch. I think it's Amazon who owns Twitch, if I got that straight. So that was interesting. YouTube, by the way, YouTube is crushing it when it comes to revenue. They showed like YouTube what it might be worth. If YouTube was just its own segment, it could be worth like 200 billion? But obviously that was just one analyst. They're probably bullish on it. Is it better for inflation if the PPI goes down? So remember that PPI leads inflation because producer prices are going to lead consumer prices, right? They get the prices first, the producers, and then they're going to either pass that on to the consumer or they're going to absorb it and they're going to take the hit. So that's why corporations can adjust to inflation, can adjust to different market conditions a lot quicker. How's the broadcast going? Going pretty good. Google doing layoffs. Yeah, Google doing layoffs. And a lot of this is a lot of Google doing layoffs. JP Morgan's doing layoffs. BlackRock's doing layoffs because technology is taking over, right? We're getting a innovation happen. AI's innovation. And so you don't need to hire as many people. You can still do the same job, less cost, more productivity. AI can work 24/7. So that everybody's cutting costs. It's not a sign of a recession. It's a sign of a transition into a new age of technology. And it's going to take some time. Oh yeah, like the live. Thank you. I always forget to say that. If we get high, so Jervine says, if we get high PPI leads to production cost increases, that's passed on to consumers. Yeah, that's passed on to consumers. Usually if you have pricing power, meaning you can who is it? I believe it's CME. Who is CME? What is the burrito place? I can't think of it. Chipotle. Chipotle has pricing power. A lot of people love Chipotle, got a lot of demand. So they can increase their prices and people still go buy Chipotle. They have pricing power. Where other companies, and I don't know off the top of my head, I can't think of them off the top of my head, they don't have pricing power. They might actually absorb the producer prices going up, but it might hurt their business. The stock sells off. So they have to make a choice there. Either way, PPI is pretty low. So it's not that big of a deal. Like we'll look historically, like 25 years, we're at 2%. So even if it ticks up to 2.2, that's not a big deal. It's all about where is the trend headed and at what level are you at? What level are you actually at? So producer prices, even if they tick up a little bit, that's not going to be bad. Commodities lead producer prices also. Commodities, wheat, all the inputs to the producers, which is going to be wheat, electricity costs, energy costs, natural gas, copper, oil. That's the biggest input. And those are all still pretty low. So the trend is not going to change. We're still going lower. Now, we're not going to decelerate as fast as we did in the past, but inflation is pretty much done. And I think that's why the market is pricing in a cut in March. Who knows if it actually comes, but the economy is still pretty strong. It's just going to slow. Consumers are going to slow down for a bit. Hopefully that answers your questions. So yeah, it's good. If PPI comes in lower, that tells you that producers just they just passed on some of the costs a little bit. And the market's going to, when it comes to equities anyway, or the stock market, it's going to be looking for earnings. Where are earnings at? And we got earnings on Friday. So I think it's all about the earnings picture. Can we grow in a slower environment, right? But this is a look back on Q3. So Q4, not Q3. So earnings season that we're getting here in January is actually a reflection of October, November, December. So we're still looking backwards. The forward-looking stuff, right? The forward-looking stuff is a little harder to predict, but it's going to be the ISM. It's going to be the ISM data. I did say that we were going to go over positioning a little bit, and what we have for positioning right now. Let's go ahead and take off fear. No, this is a fear and greed index. Somebody asked me what's in here. So the CNN fear and greed index is usually comprised. Oh, that doesn't look good. Is usually comprised of, it is at the highs, a lot of greed. It's usually comprised of stock price strength, stock price breadth. So breadth as in, you know, if there's 3,000 stocks, or I don't know how many they're counting, how many of them are actually going higher, not just 2 or 5 or 6 or 10 or 50. Put and call options, and we're going to look at the put to call ratio, market volatility, safe haven demand, and junk bond demand. That's a bunch of crap. Who knows what it really means? But just take it with a grain of salt. We're in the greed stage. I still think we move higher. If we look at the technicals, we'll go over the technicals. I still think we're gonna consolidate, right? I don't think we fall much further. I could be wrong unless the Fed comes out and says something crazy, but I think we're gonna be consolidating at the highs for now. AAI investor sentiment. Now this hasn't updated yet, so I don't think we need to look at that. It hasn't updated yet. But the put to call ratio, puts are picking up. And I can see why they're buying puts. Where's the put to call ratio? Here it is. Put to call ratio. Those are actually picking up. This is just verse S&P. Let me take this off and then we'll zoom in. Okay. Put to call ratio has been climbing. The last update was yesterday, right? And people are buying puts. They're probably buying more puts going into this inflation report, right? And I think this is why. Let's go to the charts. There's a lot of resistance here. On SPY. This is S&P 500. We need to get above this level. I don't see us getting above this week or for tomorrow, maybe next week. I doubt it. I think we're going back to, I think we're going to consolidate sideways. So traders should have a party here. This was the open rejection. This is, oh, if you're day trading, beautiful. If you saw this, okay, boom, another level here, right? You open up early morning and it gets rejected, and then you open up. You want it to get there. It didn't get there, but it sells off. You get under VWAP. You get under the previous day close. You get rejected again. This was beautiful if you're shorting, but you can't think it's going to, you know, it's going to the grave. So we did bounce. You see that little reverse head and shoulders got high, came up higher. Now we're back at PDC. I don't know how we're going to close. We'll see how we close. Got rejected first. Should come back to VWAP and then maybe move higher. I don't know. Anyways, by the way, I have an idea for mine to hear. I'm a digital artist. I do artwork for streamers and YouTubers. Oh, I see. Discord or Instagram. Are you marketing? Are you trying to market on my live? Well, go to my profile. Send me email. We'll see what you got. Yeah, I cleaned up today. Shorting, great. Yeah, shorting was great. That was a negative report. Everybody should have shorted that. But if you're swing trading, I think you're a little bit in trouble. I'm kind of hands off right now because there's not a whole lot of clarity. I've been saying there's not a whole lot of clarity. So I think day trading, right? I am not advocating for day trading here. Okay, TikTok. So chill out. I think day traders are gonna do pretty well, and because there's a lot of volatility. Volatility is, and actually, you know, even though it seems like there's a lot of volatility, look at the VIX. Oh, we'll go on this chart. Look at the VIX. So bullish. The VIX is still low. So volatility is still pretty low at the lows. looks like a secular bull market, but we need to get above that pre-market level for the S&P. And I know somebody wanted to look at the Qs. It's pretty much the same picture, right? But this candle, this capitulation candle tells you we're stronger than expected. But I think we might be moving sideways here. We actually had mixed data pre-market with CPI and jobless claims. Market rallied at 9:30 a.m. before dump. Oh yeah, the jobless claims revisions, no recession basically. So mixed data. I would say CPI is a little heavier of an input, a heavier variable than jobless claims. But it is looking backwards. Jobless claims are looking like, they're a little more forward looking, or, coincident or real time data. So jobless claims are real time data. I think people just spent a lot in December, but it's not a change of trend. We're not seeing a real change of trend there. Good volume for the BTC Bitcoin ETF. Yeah, we did have good volume for the Bitcoin ETF. Lots of volume. One of the best IPOs. Imagine if there was only one too. Jobless claims came in lower. Yep, they came in lower. No recession. No recession. Thanks for clarification. 100%. Do you think the Boeing will affect the S&P dramatically? I did hear something about Boeing. What was it? Boeing maybe being bankrupt. Yes, I think that would be that could be an issue. Let's see what is Boeing looking like right now. I don't think it's that. I think the market will shrug it off. Oh, big gap down. Dang, Boeing is getting crushed. It could be. The worst thing would be that, you get back orders, not back orders, but you have a lot of delays in flights. I have no clue how correlated this is, but if you do get delays in flights, then, you could be having those transportation services remain hot for a while, which I think might be the case. But core inflation, X housing, X services, I think it's just falling. Right? Oil prices, they're probably going to fall. Saudi Arabia is probably going to flood the market. So I don't see that really happening. Now, the Bitcoin ETF, let's go ahead and look really quick. Crypto. And you know what? I didn't see ARKs. Oh, it did. Okay, it did come out. It didn't show early morning for some reason. But here's ARKs, Bitcoin ETF. I wonder if they all traded the same. Pretty much. Here's GBTC. What a gap up. Big gap up for Grayscale Trust. And then you got BlackRock's Trust. And then you had some other stuff. Oh, yeah, they don't have nothing. That was the first day. And then you had some other news going on with the Bitcoin ETF. I think it was Vanguard said that they're not going to allow Bitcoin trading. But it's like, bro, what? You guys already have futures. You guys already, you have they own MicroStrategy, but they're not going to allow Bitcoin spot trading. So there's some funny business going on. I think they want to buy lower. Someone on that fight said they bought puts instantly and considered it insider trading. Are you talking about Boeing? I'm not sure what you're talking about on that, because you said someone on that fight. Oh, flight. Oh, okay. Someone on that flight. Probably on Boeing. I wouldn't doubt it. Well, you got some very bullish, Ethereum is breaking out. So, on the upside, look at that. Oh, oops. Look at this big move for Ethereum. Okay. So Ethereum is starting to show some strength here. Are we on this? Yeah, we are on the log. So it broke out a while ago, and now it's starting to trend up. Okay, and next target's up here. This was a pretty thick move for Ethereum. Ethereum is leading the market. So over what, three or 4 days, up about 23%, 19% over the past 2 days. It's looking pretty good. What's up with the Ripple buybacks? I don't even know about that. I don't know about the Ripple buybacks. XRP? I don't have a whole lot of confidence in XRP going forward. I just don't. But We'll see if XRP can ever get back to this is what you're talking about. I'm guessing, right? Ripple buybacks. I haven't heard of that though. I don't know what that is. Um, Ripple's gonna buy back their XRP coins or something. I mean that would be bullish. It sounds like they're desperate. It sounds like they might be getting desperate. I'll send a link. Yeah, send me a link. They might be getting desperate because nobody's buying their coin because their use case is gone. Like we said yesterday, Ripple doesn't have a great use case. Nobody's using their blockchains. They're going to do the banks, the institutions are going to create their own private blockchain. So Ripple is pretty much done. I only do day trading. Okay, cool. Good volume for the Bitcoin ETF. Want to look at technicals here? I'm still very bullish on Link. Chainlink. You see BlackRock is cutting their workforce. A lot of you're going to see a lot of banks cutting their workforce because they're now entering tokenization. They're going to tokenize or use smart contracts, in other words, to execute different processes, right? So if they're doing that, they don't need other people to execute those processes. So blockchain technology, distributed ledgers, smart contracts, they're smart so they can do it through code. So you're going to see that elimination start to happen, and all of that works with CCIP. Still bullish on Chainlink. The graph is looking pretty good, blah, blah, blah. Bitcoin, we'll see what Bitcoin does. It's still holding this level. It's looking pretty bullish, but it is a little, actually it did come down. This is kind of bearish divergence, so I'm not sure what's going to happen. I'm still waiting. I'm still waiting a little bit. In another account, I think we're going to have another pullback. I think we'll see another pullback, and then that's when it's time because you have a lot of support down here. And the ETF is out now. And guess what? Big money doesn't want to buy these highs. It wants to buy a capitulation to the downside. That's my view. Maybe I'm wrong. Tesla, on the other hand, almost at target. I almost got in so many times, but I still think we're going to fill this gap. There's a gap here at 223.60, something like that. It might not be perfect. What did it say? Oh, I just saw something on BlackRock. What did they say? It just passed 1 billion in volume today. Okay, let me pull this up on X. It looks like BlackRock's ETF just broke a record, $1 billion of volume. 1 billion in volume. Let's pull that up really quick. 1 billion in volume. Dang, a lot of news. Yeah. Well, I don't know what's up with Vanguard. Vanguard not allowing the BTC spot ETF. It doesn't align with our values because of the volatility. They're going to buy it. Man, they play so many games. All right, anyways. Who sent that? Who sent that? Let me see. Where did that come from? I'm trying to find what I just read. Tesla, armed conflict in the Red Sea. What does this have to do with Tesla? Oh, it's impacting their production. Okay. Ooh, dang, this is not good for Tesla. Tesla, we are forced to suspend vehicle production in Gigafactory Berlin from January 29th to February 11th, with the exception of a few sub areas because of the Black Sea conflict or the Red Sea conflict. Uh-oh. And then we got some Fed stuff. But I just saw, oh man, who put this out? Who put out the SEC or the volume for the BlackRock ETF? I don't know. I can't find it. Who put this out? I'm trying to find it. Maybe it was this guy. Oh, there it is. All right, so IBIT, ticker symbol IBIT. So IBIT. And this is weird. At first, I was a little confused. It says Defiance Daily Short Digitizing the Economy ETF, which is basically the BlackRock Bitcoin ETF. So I don't know why it says that. But has BlackRock's Bitcoin ETF has just passed 1 billion in volume today. Will break BITO or BITO, which is, I think, Bitcoin futures record, with hitting 4.3 billion or 2 billion ex GBTC, which isn't new. That's a lot. Also, good sign to see 4 issuers over 100 million Okay, strong middle class in the works. Easily the biggest day one splash in ETF history. So it looks like this might be the biggest one day volume trading in history. A lot of people did short, obviously, or sold, shorted it. So, I mean, there's a lot to come going forward. Lotto puts tomorrow. Yeah, I don't want to I don't want to get suspended for saying something, but how do I say this? This level looks juicy for the S&P to short. It looks juicy. I'm just not that bullish yet. Let's go to this one. This one looks a little better. Or Qs. I mean, I would be careful shorting the Qs because Microsoft just passed Apple. The Qs are a little tougher. There's always some news that can come out. But this level, you're getting a rejection at, what is this, 248? Or I'm sorry, 478. You're getting at 478.50 to 478. You're getting a lot of resistance there. And then PDC, previous day close, it's getting rejected there. So this could be a nice, you know what, right? And then you have that previous resistance, 475. If it gets under 475, I know there's a lot of volume there, a lot of put options. So I think the put to call ratio needs to go up a little further before we see the market really take off. I could be wrong. Maybe earnings are better than expected. Stay short, folks. Stay short. Also need to use code words if you have any code words to describe certain things, because the algorithms are punishing you for saying certain things, and it's probably going to get worse. Hertz canceled Tesla orders, too expensive to maintain cars. I saw that. I heard the Hertz guy talking this morning, basically said that when Tesla cut their prices, it dropped a lot of their asset values. Their balance sheet dropped a lot because, when we get in the course, I'm still working on it, bro. There's a lot of details. Again, I don't want to push it too quick. I know I hate it. I'm working on the course on the side. That's why I'm streaming less. I'm streaming less because I am working on this course, and it's looking pretty juicy. It's looking pretty juicy. Macro, technical, fundamentals, putting it all together. And the macro is going to be really good because that's my, there's a lot of technical stuff out there. There's a lot of fundamental stuff. It's boring. I'm going to make sure this is not boring. It's easy to digest, like a fifth grader could understand it. And making it simpler takes a little more time. Yeah, it'll come, Jervine. I need to level up. I appreciate it though. Thanks. That pumps me up, bro. That pumps me up. I'm gonna have that course out. I don't know when. I'm like Elon Musk. It'll come out in January, and then I realized doing it, this is gonna take a little more time than I thought. And I was sick for a while. I hate to make excuses. There is none, but I got sick, and then it was Christmas and all this other stuff, and I was like, dang, I'm behind. I was like, let me just take a break, refresh. Good refresh. So it's coming. I'm still working on it. Just remember, I'm still putting work in there. What up, Dimaj? Back to the chat. So yeah, S&P looks like it'll be flat for a while. Let's take a run through. Well, I was talking about this. See Tesla getting rejected. I think Tesla needs to fill this gap it doesn't need to. Nothing needs to do anything, but I'm waiting for this gap at 223.66. It might not even matter because earnings are coming up soon. Right? Earnings are coming up soon. And I would like to see the price collapse into earnings, because there's more likely a chance it goes up. But with all this negative news, with them cutting prices, they're also increasing wages for Tesla workers, which should cut some of their bottom line, some of their margin also. So there's a lot of worries with Tesla now. And I say worries as in price pressures to the downside. A lot of shorts might jump in this, but here's the golden rule. For me anyways, I want to see this RSI get extremely oversold, right? Extremely oversold, and we always get a bounce. We always get a bounce at some point. That's when you start licking your chops. That's when you get ready. So I'm just staying as patient as possible. Got to stay patient. It could just rip right through this gap. It does it all the time. But that's what I'm waiting for. We'll see how earnings start to turn out for the market overall. Let's see how, I know Apple lost market share, right? Let's go through this really quick. Qs, SPY, IWM. Small caps, fell back a little bit. Oh, the Dow. The Dow is pushing to all-time highs. You want to hear a funny story? I'm doing some research for this course, and the greatest bull market of all time was actually in the roaring 20s. I posted a little bit about this on Twitter. Let's see if I can remember it. The roaring 20s. I'll show you the chart. It's insane. It went up, the market went up 500% in like 8 years, and then it dropped 80% like Bitcoin. So a lot of people were jumping out the window. Mobsters were speculating in the market, and they were getting called for margin, and they were getting called on margin. So they would go take dynamite, and see if I can say this correctly. They're taking dynamite and they were throwing it in the brokerage firms because they're losing money. They're getting called. So that was a huge crash. It was a Bitcoin crash for the stock market. And that was wild. But anyways, yeah, Dow looks pretty strong here. Why would the Dow be a little stronger? Maybe because, I don't know. I really don't know. I don't want to make something up. So you got Dow strong. You got ARK down a little bit. Also, Cathie Wood revealed that I think 25% of her net worth is Bitcoin. So, and she bought Bitcoin way, way back in the day. Apple trying to recover here. Amazon always has some funky price action. I don't like Amazon's price action. Never was a fan. Google with the PDC rejection. I bet you this is a nice sell candle. Look at that. Capitulation to the downside. Nope. Got rejected. Tried to go higher. Nope. And then got under PDC going low. I think the market's going to come down. I think it's going to come down a little bit more. Now, I was wrong. I thought we would be at the lows during inflation, but it turned out that's not the case. I was wrong. Meta. Microsoft. It looks a lot like Amazon. Netflix. I think Netflix Netflix looks actually pretty strong. Tesla looks like trash. Nvidia still a monster. I mean, Nvidia recovered the most. Sharp sell off and then boom. I should be looking at Nvidia, but I'm scared. AMD. Oh, that's a nice look at. If you, how do I say this? If I were to get short, then this looks really good because this is the previous day close line right here. I think you can barely see it. You can't really see it that good. It's coming up in a PDC. Now AMD already came out with their new chip that they were talking about. So you get that rejection here and maybe it comes back to the lows. No advice here, no trading advice, but looks like a good setup. Especially if the market continues to roll over. What else we got? Zoom. I actually like Zoom for a swing trade, but we'll see how earnings come out. Zoom reports a lot later than others, so you got to be patient with that one. I believe 30% of the market cap of Zoom is in cash. So Zoom has a pretty strong balance sheet at the moment. They are coming out with AI stuff. They're doing good in a corporate, not doing good, but a lot of their segments for corporates, communications they're getting like some type of government contract. I don't know what it is. I don't remember. I have to look back into it, but I don't want to look too into it and get FOMO. Let's see. Palantir's down. I mean, that's pretty much it. Any questions? I don't want to make this too long. I'm going to go back to the course, go work on the course. If you guys have any questions, let me know about inflation. I think it looks like the inflation report wasn't that bad, or else we'd be seeing the dollar surge. We'd be seeing yield surge. And maybe that happens tomorrow, but I would put a little more emphasis on CPI than PPI. People are still buying bonds. Crypto's trying to break out. Put to call ratio. Move index, nothing, no change. Yeah, you're welcome, Kiki. We'll do another report tomorrow. Oh, no, I'm not done yet. Let's go over the Fed. Yeah, the Fed did speak today, so the market could be waiting to see what the Fed says about this report to key in on when they might start cutting or balance sheet runoff, right? They are talking about balance sheet runoff. So, quick little break. Yep, let's do a quick little break, and then I'll be back, and then we're going to go over the Fed right here for you guys on TikTok. We're going to hear what Fed Meister says, and we will interpret. Oh, actually, I have to do it on this tab. Ah, no way. I can't do it on that tab. Come on, StreamYard. All right, I'll just put this up. We're going to interpret what Fed Meister said today. Quick little break, and then we'll be back. We'll listen what the Fed said, interpret it. Hold on. All right, I'm gonna have to pull it up on a. You're gonna swing those puts, Fibonacci Poppy. Okay, gonna swing puts. All right. I gotta. I'm gonna have to just pull this up on YouTube for the YouTubers or on my Chrome tab. It doesn't allow me to show the video on just a media file. So let me find it on YouTube. Yeah, let me find it on YouTube. It's on Bloomberg. I believe Bloomberg. Come on, where's it at? Pretty sure it was Bloomberg. Yeah, there it is. Okay, I found it. All right, here we go. You're crazy sometimes, he said. Yeah, the RSI needs to come down anyway. So, or it looks like I think it needs to come down. So I think we're going to be moving sideways until that RSI comes back. Also, there's a 10-day weekly moving average. I think the market is waiting for that 10-day weekly move. Actually, let's look at that real quick before I forget, because I always forget what I want to share, and then we'll come back to the. We'll come back to this. So let me just show you guys really quick what I'm looking at for the bull side. I think if you go to the weekly chart, okay, you go to the weekly chart. Here we are pressing against all-time highs, and if you actually take a look back, it's very bullish. It looks like a cup and handle. Very, very bullish, right? You're getting some. Let's see what the volume looks like really quick. Not great volume, but once we start pressing through on a good catalyst, it could be earnings. We're gonna break through that. A lot of shorts there waiting. And this is what I meant by the moving averages. Let's go to the weekly chart, right? So I heard some people talking about this 10-week moving average. A lot of institutions are watching it. Who knows? Maybe it's wrong, but either way, this is the 10-week moving average, and I think we're going to consolidate, or there's a possibility we just consolidate sideways. We could come back rapidly, but there's a lot of support there at 466 for SPY, and we're waiting for that moving average to catch up. So once it catches up, maybe we support for a couple days and then we move higher. We'll see. It's all about earnings at this point. And then we don't have Fed till the January 31st. We'll be streaming that live, obviously. Yeah, I think that's it. So check out that 10-week moving average. If you go to the daily, they were talking about using it on the weekly, but if you go to the daily, you're probably going to be looking at the 50-day moving average. Not this one's a little closer. So it's pretty much the same thing. Pretty much the same thing. We're waiting for this to catch up. Right? Consolidation, catch up, move higher. Did we ever see that before? I think we did. I guess you can't really tell. Oh well. Markets change. Relationships change in markets. Remember that. Relationships change in markets. I thought the dollar yields relationship would change, and it did not. Not yet. But I think it is possible. Maybe it doesn't change, but things do change, and that's why people are wrong a lot of the time. It will be tested. Okay. Yeah, I think it'll be tested. We're still overdone here. You see the RSI is struggling. Really struggling. It's making lower highs. It's making lower highs, low lows, lower lows, with price consolidation up here. So we could be coming back down to the lows before we move higher. 4 hour, you said 4 hour RSI. It looks the same. Looks pretty much the same. Head and shoulders. Yeah, it looks the same. We probably need to touch down here to catch up with some things. We'll see how that plays out. All right. Back to the nerdy stuff, the Fed nerdy stuff. This is where our signals are at, though, right? Our signals are here with the Fed. The Fed's speech or the Fed's talk is a signal, and that does change with the data. So when the data comes in, the Fed's going to say something about it, and, interpreting it is key.
Market thinks that May is the most likely month, but there's still a very good chance that you might cut rates in March. Where are you?
Well, I mean, it's hard to predict the future, as you know, and it's really going to be dependent on how the economy evolves. I think March is probably too early in my estimation for a rate decline, because I think we need to see some more evidence. I think the December CPI report just shows there's more work to do.
Okay, so she says March is too early. December shows there's more work to do, but she does know in the back of her head that consumption is the highest. So she needs to see more evidence. Okay, well, February, we'll see more evidence of January. Then March, we'll get the evidence of February, which should both be pretty slow. And if that's the case, we could see inflation in the 2.9s. They switch everybody takes this as, oh, they're not cutting at all. No, they're just based off that evidence. They're definitely not cutting.
And that work is going to take restrictive monetary policy. But I do think that as we see continuing disinflation, and we could get more evidence that is convincing that inflation is on a sustainable downward path to 2%, then I think, we'll have that conversation about, okay, is it time now when we look at inflation, but also importantly, inflation expectations, right? Is it time now to move the inflation, or move our Fed funds rate when monetary policies start that process of moving it back to a neutral rate? And what I would say is, I view sort of the soft landing scenario, right, as being the most likely, but I do think there's risks around it, and we have to be attuned to both sides of the mandate. So a reduction in the funds rate that is because we try to keep monetary policy well calibrated to what's happening on the inflation side of the mandate and employment side, that's different than having to cut the rate because we're heading into a recession. So, rate decreases, not from rising. So when inflation and inflation expectations begin to come down, right, if you didn't do anything to your funds rate, you'd actually be sort of, passively saying a tighter policy.
So you hear that. What she's basically communicating there is, when inflation comes back down, okay, it had a bump higher. As it comes down, that's actually making policy more restrictive as inflation is down. So they have to adjust as it comes down. And that's not because of recession. They think soft landing, which it's not like they know this, but look at consumption. It's still pretty strong. People are still spending. They're just not spending as much as they did, because you're not going to get that type of spending. So these next couple months are key to whether there's going to be a recession or not. By the time you get halfway through the year, there's no chance, in my view. There's no chance because you know the politics, you know the White House, you got to understand that stimulus is coming, right? You're going to see more stimulus. They're not going to allow there to be a recession as this data rolls in. So we need to get things down before that. And I'm not before that. We're going to be watching the economy before that, see what happens there. So yeah, she's just basically saying as inflation comes down, we'll cut along the way. We're not there yet, right? Maybe February, by March, they might be there. That's also when the Bank Term Funding Program is done, which supports banks. That's also when the well, I don't want to say this is when, but shadow liquidity might be done at that moment too. It might run out. So they're gonna have to do something at that point.
That's the part of the evaluation that we're going to have coming up. But right now, the evaluation, I think, is, and the policy evaluation is, how long are we needing to keep interest rates and monetary policy at this restrictive stance? The next phase will be about, okay, is it now we've seen the conditions we need to start reducing the funds rate and reducing our funds rate back to a more neutral stance. I don't think we're there yet. I would like to see more evidence that the economy is progressing as we expect it to, as I expect it to, before we can do that.
Hey, that must have been a short video. I watched one earlier also about she said the Fed they're now, oh, actually we'll look at that. She said they're also going to start talking about tapering the balance sheet, right? So it's called balance sheet reduction. What is the name of it? Balance sheet. Basically their credit card, they've been draining the credit card. They've been draining credit from the system. And now they're talking about slowing the pace of drain. So no longer draining as much, which is a move to easing. It's a dovish move to easing. And they're now putting that on the table, right? They're putting that on the table. They're just speaking about it, and they want to see how the bond market actually reacts to that. But let's see what one of the Fed governors said today. Let's see. Let's see if I could just scroll down. Fed Goolsbee, he was pretty dovish. Also, the ECB is talking about they're done. They're talking about being done. Fighting inflation can mean less growth. Yep. Salary increases are currently outpacing inflation. That's good. I see Eurozone inflation at 1.9% in 2025. Okay. Lagarde, blah, blah, blah. I think, here we go. President Lagarde. So this is the European Central Bank, kind of like Powell, but for Europe. And she says, I think interest rates have reached their peak. First time she's probably said something like that. I think you're right. I cannot give a date at when interest rates may go down. Already talking about going down now, cutting. Rate cuts can start once data confirms the inflation path. And I think their inflation is barely starting to roll over, but it's rolling over pretty quickly. A re-election of T in the U.S. would represent a threat for Europe? No way. What? That's insane. Very political. A threat for Europe. Interesting. Okay. Fed Goolsbee. So this is back to the U.S. Fed. Risks include persistent housing inflation and potential supply shock. That wouldn't be good. Okay. Persistently higher shelter inflation CPI may have less implications for the Fed's personal consumption expenditure inflation target. Okay. So I think what he's saying there is shelter or housing inflation is not that impactful it's not a big enough piece for personal consumption. And I think a big piece of personal consumption would be services, obviously, and goods are already kind of low, but food away from home. So stop eating out. No, I'm just kidding. December services inflation was a little more favorable than expected. Okay. Housing inflation was a little less favorable. So it looks like they are Goolsbee at least is admitting that services was pretty good. Overall CPI inflation in December was pretty close to what was expected. Yep. Santa Claus rally, Santa Claus holiday spending. 2023 was a Hall of Fame year for inflation reduction. Okay. Fed Goolsbee, the Federal Reserve are still definitely on a comfortable path, making progress on inflation, unlike a year ago, blah, blah, blah. Okay. Still on the golden path. Inflation will be the primary determinant of when and how much interest rates should be cut. And I think we do see inflate our headline at least in the twos if oil doesn't spike because of some geopolitical threat. I think we're going to see the twos in March. For sure in March. February, maybe not. Maybe we go back to 3%. But there shouldn't be much spending for January or February. Maybe a little bit in March, which we won't see till April, the April print. Because what is March is typically in the US at least is spring break. Federal funds rate view not the lowest out of blah, blah, blah. Okay. Yeah. Okay. Well, that's not good for Tesla. Random question, but you have any videos, documentaries you would recommend for viewers to watch, topics like the economy, market, money? Good question. Good question there. Well, let me think about that. Any documents? I will say this. Let's see. Any documents about the economy? That's been tough. I'm reading a book right now called The Greatest Bull Market in History. It's very long. It's like 400 pages, but I'm using like an audio thing where it scans it and it just reads it to me. Oh, that's you, $400 Hey, I appreciate. I knew it was somebody. I appreciate you retweeting too. I see that all the time. Like, that's what's up. Keeps me motivated, bro. Books for, okay, so there's The Intelligent Investor. Everybody talks about that one, but it's actually super dry. It's very dry. That one's very dry. This one too is pretty dry too. It's a bunch of just history on the market. You know whose research is really good is Cathie Wood. Cathie Wood has really, really good research. Now, her actions might be pretty risky, but I mean, it is what it is. She's an innovation fund. History. Oh, okay. So there's this dude. His name is, watch, I'll put it in the chat. There's this dude. His name is, and I'm over here on YouTube, TikToks, if you guys are wondering. There's a guy named, his name is Peter. Is it Peter? No, is it John? Joseph. There it is. Joseph Schumpeter. Or Schumpeter. I'm going to put it in the chat so you can see. Look him up. He's an economist. He was an Austrian economist who basically left. He left Austria back when Hitler, I don't know if I can say that word on here, was coming into power because he didn't agree with the socialism and all that. And he, okay, nice. A random walk on, thank you. And if you guys have one on there, throw it on there. A random walk in Wall Street. So Joseph Schumpeter basically came up with the philosophy of creative destruction, or capitalism comes down to innovation. So this is what I was talking about. I was doing some research, and the greatest bull market of all time, I told you guys I would show you that, that chart. You got to go to the DJIJ, was basically a big recession in the 1920s. There's a huge recession. It'll be easier when you see the chart. Let me pull it up here. Take this off. Dow Industrial Average. We'll go to the monthly chart. Go to the monthly chart. And it showed how innovation basically drives capitalism. And check out this bull market, though. This is just the history, right? But if we go all the way back to 87, this was basically the roaring 20s. And you had broadcasting, telecommunications. It started right here. So you had this big, and this was also Jesse Livermore. You could read Jesse Livermore, and I think it's like, what is it? Jesse Livermore and the something of stock options, blah, blah, blah. I don't know. He traded stocks. He ended up taking his, you know what, because he lost so much money eventually. But that wasn't until the 50s. So Jesse Livermore, go check out that book. That book's pretty good too. It just depends what you're doing though, right? I don't know if there's any really good. A lot of these economic books are super boring. They're just incredibly boring. They don't tell a very good. It's hard to stay focused. It's a bunch of blah, 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 just repetition, which is why I'm creating that course to make it more easier with visuals and blah, blah, blah. So anyways, you had this big boom. Now, this was actually when Ford came out, the Model T came out. It came out before, it came out earlier, but it didn't come to high production. People weren't purchasing cars until I think 1921, 1922. They started buying cars tremendously. Most transportation was just rail, and then they started buying cars, and boom, the economy exploded. And then you had broadcasting come online, so people had mass communication, which increased productivity to some degree. Then you had aviation, commercial flights. So this big bull market, this was the biggest bull market for like an index. Obviously, individual stocks can go crazy, but it was pretty big. From the lows, it was about 500%. It was about 500%. What does this say? 464? I measured it bigger. I thought it was bigger than that. I'm pretty sure I measured it at 500. There it is, from top to bottom. And I know that's from the lows. But, you know, some people say it's not a bull market till you make new highs, but from the lows to the highs, about a 500% increase, and then a massive drop, 80% drop. That drop touched all the way back to 1907. So that book, The Greatest Bull Market in History, I like that one so far. It gives you a lot of history about psychology, how people thought about interest rates. I believe the way they talk about it is the Fed was increasing rates a little bit and the market still went higher because they saw that as a demand for money. And if there's more demand for money, for borrowing, that's bullish for the market. So it just depends why the Fed is increasing rates, at what pace they're increasing rates, where's the absolute level before they start increasing rates. So it's pretty interesting. But yeah, I'll check that guy out. I've been listening to him. And then other books, I don't know. I like Real Vision. Real Vision has some good stuff. So Real Vision, they have a lot of good financial stuff. A lot of it is free on the website. Oh yeah. There's a course on Real Vision. It talks a little bit about the economy. It is kind of dry, but it helps you out a little bit. And I think it is, I don't remember what it's called, but you can find it. Just look up Real Vision, business cycle, whatever. Oh, any updates on Cooler? Yes, actually, they came out with a video today about their technology. So let me get up here. So Let's Be Leaving says Random Walk Down Wall Street was a fun audiobook. Okay, thank you for that. Can you explain how bonds work like a third grader? Thanks. Oh yeah, I love it. Yes, I can explain how bonds work as a third grader. Let me try my best. I've been practicing on this. So let me give you a visual. It's always much better to have a visual. Let's go TLT. Let's go to the 1-day chart. TLT. I guess we're going to have an education course here. So this is the bond market. This is an ETF, so it's not like the exact reflection. And then what I'm going to do is on TradingView, I'm going to add the US 10-year yield so you can see how they move in opposite directions. I'll turn this into a line so you can see it. So basically, filtered out. Oh man. Oh well. I don't really see your comments, TikTok, because you're not in my view, but if you want, just comment over there on YouTube. So yeah, let me explain this real quick. So you have bonds or debt. This is US debt. So bonds is just another word for debt. Okay, companies, or it's either going to be a company or a government, they sell their debt. And this would be the debt that you buy in the white. This is TLT. It's an ETF of debt. It's a basket of different long-term bonds. So this is long-term bonds, but in general, it's debt. You're buying debt of the US. Why do you buy it? Because you get paid pretty much the yield. To simplify it, you get paid to own this debt. If you own this debt, the government will pay you depending on the yield. Let's just make it simple. They'll pay you an interest rate. So you're actually giving them money. They're borrowing money from you when you buy the bonds. So they're going to pay you interest to own the bond. And the way this works is when bonds go up, when the bonds actually become more expensive or there's more demand and the bonds move up in price. So let's say you bought the bond at the lows. So on this move, you'd have been up 50%, right? Your bonds moved up 50%. And wherever you locked in down here, you're going to get paid that interest on the way up. So the interest is this. This is at 3.2%, right? 3.2%. This is how much you're going to get paid. Now, it is very tricky, so I'm just going to make it very simple. let's say your bond goes up 50% and you're getting paid 3.2% a year, right? So you're going up in value and you're getting paid a percentage. So that's kind of how the bonds work. You buy the bond, you get paid that interest rate wherever you bought it at. Now, if you're watching the market, the way the bond market works is, let's say you're not invested at all, but you're using the bond market rates to see where rates are headed. Well, when bonds go up, rates go down. Okay, rates go down when bonds go up. When bonds come down, rates go higher. So they move in opposite directions. That's why we always say watch the bond market. That determines where rates are going to be. These are real rates, the real interest rates for the market. So in general, people think the Fed is the one who sets the rates. They don't. The bond market does. The Fed sets short-term rates, 24-hour rates for banks lending, for bank lending overnight. Banks borrow from each other overnight. So that's what the Fed sets, the Fed funds rate. That's what that is. When they move rates, when we say, oh, the Fed's going to cut rates or increase rates, that's for banks, but it does affect the other rates. So you have rates at 24-hour rates. You have 3-month rates, 6 months, 1 year, 3 years, 10 years, 20 years, 30 years. So these are 10-year bond yields right here in blue. These are just 10-year rates. So the bond goes up and the rates go down. So basically, what we're seeing today, or during the pandemic, I think this was the start of the pandemic here. Let me move this out of the way so I can make sure. This was the start of the pandemic. No, this wasn't the pandemic. Where's the pandemic? Right here. So everything crashed, right? Everything crashed in 2020. See if I can explain this really good. This was right here was basically the pandemic. Let's go March. So this was March. Bonds crashed, and you would think they would go up because there was no growth in the economy, but actually the Fed started printing so much money that people said, well, forget bonds, let's own equity. So anyways, bonds crashed, and that's no. Okay, I said that wrong. See, I'm getting confused already. Bonds went up initially when the market crashed, and then the yields dropped. So interest rates fell tremendously. This is where everybody locked in. The S&P locked in rates very low because the bond market basically bid up tremendously. There's no growth in the economy. So, hey, why not own bonds? The government's going to pay you interest when everything else collapses, and the interest rates dropped. And then ever since then, they printed so much money. There's so much stimulus that the rates started going higher because people sold their bonds off. We had the biggest drawdown in bonds in history in this past decade. So you were a part of history. They drew down 51%, right? And that's basically U.S. Treasury bonds. So Treasury bonds dropped and rates went higher. These are the 10-year rates. So these are basically the interest rates. I don't know if that's the easy way to explain it. I explain it way easier in the course because I don't have a whole lot of time. I'm using visuals, but they move in opposite directions, right? It's government debt. You're buying government debt, and the more you buy, the more it goes up, the lower rates go. So right now the market is like, all right, we need bonds to go up a little bit so that rates can come down, right? And that's what's been fueling a lot of the market. So maybe that wasn't too, hopefully that was a little simple. And that's why it's better for me to explain it in the course, because my mind thinks such at a higher level. It's hard for me to explain it at a low level right away. So I'm sorry for that. Well, I'm not sorry, but I got to get better at it. Updates on cooler technology. Could you give the asset names? Max 007, what do you mean? Could you give the asset names? Are you talking about this chart right here? How to find in TV? Sorry, Max, I'm trying to understand what you're saying. Could you give the asset names, bond versus interest rates? How do you find TV? I'm not understanding what you're asking. Yes, the chart. Oh, this is just, so a proxy for bonds, because you can't really get them on TradingView. The actual bond is just TLT. Those are long bonds. If you want to find long bonds. Right now, they're selling off. When is my course available? Still building it. It's not ready yet. I'll let you guys know for sure when it's available. But yeah, this is TLT. So you have the ticker right there for bonds. And if you want to see the yield, so which is the opposite of the bonds, then you put in US 10-year. Just put in the US 10-year government bonds, US 10-year. And you also have short-term bonds too. And I have those over here, US 2-year. You can go US 2-year. They look a little different. US 5-year. The bond market is complicated. It's something I had to learn over the past couple of years. and I'm still learning it. But the bond market typically will change relationships with the stock market and the dollar. But yeah, when yields go up, so when bonds sell off, yields go higher. We just talked about that. Yields will climb, and then the dollar climbs because these yields are also interest rates. And so what interest rates means is, what that means is if interest rates are going up, then you're getting paid more on your cash. Therefore, the dollar goes higher. Hopefully that makes sense. Right? And that's why these two have been pretty much one for one. The dollar and rates went up. They kind of separated a little bit, and rates went parabolic. But if rates go up, then you're going to get paid more on holding dollars, which is why if the dollar collapses, it's also a signal that there's a better investment outside of the dollar. So we're going to see if these rates come out. We want these rates to come back down to at least 3.5 for stocks. That'll be good. So yeah, Dimaj, update on Cooler. I got to read that. I'm reading it today. I'm watching a video today. They came out with a new explanation on what they're doing. I don't really have any updates on Cooler though. Not yet. Yeah, you're welcome, Max 007. Just call that guy 007. Buy Bonds for Dummy book. Yeah, excuse me. Buy Bonds for Dummy book. They make it so complicated. Don't worry. In the course, I'm going to make it simple. I'm going to make it a lot more simple in the course because bonds are basically debt and money and treasuries. All those words are all synonymous. You hear debt, government debt, those are bonds. You hear U.S. treasuries, that's government debt, that's also bonds. But there's just different maturities, which gets very confusing. That's the yield curve. You have different maturities of bonds, and that gets really confusing. But stocks, the benchmark bond rate is usually the 10-year. Oh, you can't see it there. The 10-year treasury is the benchmark rate. So whatever this does, this is usually going to be, it doesn't move. The actual rate of the 10-year isn't going to be mortgage rates, but when it falls, it's going to pull down mortgage rates. When it goes up, it's going to push up mortgage rates. And same thing for credit cards, same for thing for vehicles or whatever. So if you want to know where rates are headed, just watch the US 10-year. That's going to tell you where rates are headed. It doesn't tell you the exact rate because rates, the bankers are going to attach a different risk to your profile, whether you have better credit, whether you're a business, whether you have enough cash, where the actual yield is versus the Fed funds rate. There's all this complicated stuff, but for the most part, this tells you where rates are headed. So I usually use this to predict what's happening next or to see where the market might go. So right now, if yields cannot go higher, this should fuel the stock market. But it came down so fast. I don't know if they're going to collapse yet. You need inflation to really, really fall for these yields. And maybe I'm wrong. Maybe they just fall but I think you need these to fall. Or you could just get a lot of demand in the bond market, right? A lot of demand for bonds. And if these go higher, just because those yields are coming down no matter what. So there's different drivers of bonds too and rates. It's not always inflation. It's not always growth. Sometimes people just want to lock in, a high interest rate or lock in a very high yield that the government's going to pay them. And so China's no longer buying these bonds either. China's not buying these. So that's why the whole narrative rates are going higher because China's not buying them. But the Fed is going to start buying these again. So the really cool thing is right here. This is actually, I don't have it on here. I'll just cover these up. And this is what the Fed Mester was talking about. The Fed balance sheet. So this is another word for this is just liquidity or money supply. So what they do is, this was the pandemic. They bought a bunch of US treasuries or bonds. They bought so many treasuries that rates fell to zero, and then they kept buying them. And then eventually they're like, all right, we're going to taper our purchases or taper the credit card. So they started tapering it. Boom, you had the banking crisis, and then it came back down. So what they're talking about is we're going to stop removing this, and we're going to start buying those bonds. And if they do that, you'll see this go flat for a little while. And then I believe it's going to start picking up. So they're going to start buying bonds. What does that mean? If they buy bonds, well, that's a huge bid. They're selling $95 billion a month of US Treasury bonds. That's putting downward pressure on bonds and upwards pressure on rates. So if they start buying them and they flip mid 2024, then all of a sudden, they're buying it, and then rates are going to be pressured to go lower. and then that's going to fuel a lot of demand in the economy. So everything's tied together. It's a big economic machine. I used to be a teacher too, so I like teaching, even though it's this I'm still learning. This is very complicated, but that's my goal. What else did you say here? PPI, Dima Yush, PPI going to the moon. We'll see what happens. So yeah, cooler technology though. Yeah, this one's a penny stock, pretty much. Look at this RSI. This thing has been getting absolutely destroyed. And this is the first penny stock I'm bullish on. And it should have a sticky service. So what they do is, and I don't know how to explain it that great yet, I'm still learning. What they do is they create batteries for NASA, or they actually help the batteries for NASA and for the Army. They test them and they make sure the batteries don't burn out. They're basically battery technology, and the market cap is super low. I've been watching them for a couple of years, and they're already government contracted. Usually when you have a contract with the government, you have a pretty good product. They have a pretty solid product. And they, for Rivian and these other EV companies, they're going to need this company to pass regulation for their battery technology. So it should be pretty sticky. Now things could go wrong, but it's pretty much sold off. So, I mean, it sold off incredibly. This is not an advocation to buy this at all. Just explaining it. So yeah, Dimaj, I gotta look into it and find out what they're doing. The chief technology officer just made a video. Do you believe everything they say? No, but you just do your research and you measure it with the trend. And right now you got to ask yourself this when it comes to this battery technology: is the world moving more towards battery technology in the next 5 years or away from it? Is it moving closer to battery technology or not? Well, I think it's moving much closer to battery technology than it's not. So these will all get a bid, especially how small it is. What do you think about Tilray, TLRY? I think somebody brought this up in the past, and I didn't really like it. Tilray, I don't see how it spiked to 3 and it's back to. Now, look, I bought this back in the day. I haven't done my research on the cannabis sector, like to this extent yet, but I just don't, there's too much supply out there. These kind of companies, they need there not to be that much. There's so much supply of marijuana. I don't even know if I could say that on here. Hopefully I don't get banned. There's so much supply of ganja that these companies can't really, they're not making a new product really. They have to push services. They're going to have to create drinks. They got to create new products. I just don't see it happening. So many people are working on this, and they're not even companies. They're just regular people growing it in their backyard. So I don't like it. I don't think it's a real secular trend yet. I think it's just black market. There's too big of a black market for this to really be sustainable. Now it could go higher because it's sold off so much, but it usually pumps and then it just dumps. So I remember it was pumping and somebody's like, what do you think about this? And I was like, I think it's just going to dump until, they have to be dominant. I don't see it. I just don't see the secular trend there. Maybe you do. Maybe I'm missing something. I don't see it. I wouldn't be interested in Tilray. Maybe for a trade, but even there, it doesn't have enough volume. And it might just gap overnight down on you pretty far. One last question. Fed balance sheet. How is that working out of the market? How is that working out for the market? Well, I mean, at first, the Fed's balance sheet was negative for the market when they started shaving it off right here. It was not good because that basically meant they're sucking money out of the system. And what they're doing is they're selling U.S. Treasuries, so they're pushing rates higher. So if it costs more to borrow money because of this, oh man, I knew it. I got a restriction. Damn. Well, I got to watch what I say. See, TikTok already hit me because I talked about Tilray. So I got to use code words. That's crazy. Anyways, so this sold off. I'm not sold off. They're selling. What this is when they're selling U.S. Treasuries, right? They're selling them into the market. They're absorbing cash. To make this quick, they're absorbing cash. So they're selling them for cash, which means they're sucking cash out of the system. So it's not working good for the market, but the market still went higher this whole year because you have another thing called shadow liquidity. Okay. It's not called shadow liquidity, but it's called the RRP. And this was a facility, RRP was a facility at the Fed that basically took a bunch of cash, and now that cash is dumping back into the market. It's dumping. So what I like to do is invert it because it makes more sense for people to see it. It's a little easier on the eyes to invert it. And what it's showing you is that even though the Fed's been pulling cash out of the system, this cash has been coming right back into the system. So the Fed essentially has been QE the whole time, even though they're saying we're QT, we're tightening. They've actually been QT. I'm sorry, they've actually been QE the whole time, or they've been doing two things at once behind the scenes, and that's why you see SPX. Hopefully this doesn't change on me. So if I throw on the S&P 500, you can see that they've been trading pretty similar, right? Liquidity was leaving the system. The S&P sold off, and then all of a sudden liquidity bottoms and starts picking up, and the S&P picks up. It doesn't mean every tick, but they're very correlated. Global liquidity is very correlated. So this shadow liquidity from the RRP that's been coming into the system has been supportive for financial conditions. In other words, I'm holding the weekly bottom well, and volume is increasing. Okay, yeah, maybe volume's increasing. I just don't believe in it, Max. I mean, I hope you make money on it. I just don't believe in it, and I wouldn't touch it with a 10-foot pole personally. Respectfully, good luck, bro. That's all I got to say. I got wrecked in 2021 trading that. Oh, yeah, that I got wrecked too. You got to be careful with those kind of stocks. Oh, me? Oh, bruh. Well, you missed it, Mr. I can't even say your name because I have TikTok up here. I have to say it weird because I already got, dude, I got literally hit with the restriction by just mentioning it. So, you're actually wrong there, buddy. But yeah, no more. I don't do that no more. It slows you down. It keeps you. I'm a health guy too. I'm a super fitness dude. I'm a fitness dude. I don't know how you guys take it, but I'm very into fitness, actually more than anything. So that kept my productivity down. So I stopped doing it, which is good. Yeah, I don't do it no more. But I can't talk about that on here. I'll get banned. So anyways, yeah, that's what we're looking at. Will your course be on Udemy? No, it'll actually be on my own site. My brother's a computer engineer, so he built a website for us. I actually have a lot of stuff on there if you want to check it out. It's I have a lot of content on there. It is mindgrowth.io, and I'm not like promoting it or anything yet. So I want to finish that course. I don't want to just promote it. I do some newsletters, but I've been slow on there. I want to finish this course up before I start doing it. But here's the site. So if you want to check it out, it has some stuff. It has some good stuff on there. But like I said, the course will have all this stuff put together. So if you go to like economics, I have a lot of newsletters just written, but I'm going to shove all this stuff into that course so that it's more organized and it's easier to digest, because these are just a bunch of different reports. And China Impulse, this one's pretty cool. The Chinese Credit Impulse, this is a leading macroeconomic indicator. It's basically new loans versus GDP. And again, it could be confusing, and it's now turning up. I made this like last year. It's now starting to turn up. That's another economic indicator that's leading. China is printing. Got to be careful how I say this. China is printing tremendously. So their credit is going up. And when I say credit, they're increasing the credit in their system. They are not pulling the balance sheet down. They're increasing their balance sheet. They're not the Fed, though. They are the PBOC, the Public Bank of China. They're increasing liquidity tremendously. Yeah, but you can go to this, mindgrowth.io. There's a bunch of stuff on there. If you go to my profile, you can see all this stuff on here. The course will be on here pretty soon. We're doing courses. Knees over toes. I had some banged up knees. So if you want to fix your knees, I do a lot of stuff. There's a bunch of videos on here where you could just, check it out. This one's like the most viewed. I don't even make this content right now, but it's the most viewed I have on there. So yeah, we have our own website. It'll be on this website, and I'll have the links in the description when it's ready. But yeah, we're not talking about that. I just want to throw that out there. It's not going to be on Udemy. Cool. Yeah. I'm trying to think if there's anything else that can help you out. Oh, if you go on there, there is some there is a man, what is it? I can't I'm man, switching topics in my head, I get so confused switching topics. I can't think of words because I'm all my mind's all caught up in the language of the market. But anyways, we'll finish off here. Let's go back to the regular charts. So I'll have the technicals, fundamentals, and macro. I'm actually thinking about splitting it up though and just because everybody has different needs, right? Some people, they don't know anything about technical analysis, so they might want to learn it. And then there's people who might want to learn just macro or maybe just fundamentals. And my weakest spot is probably fundamentals, but you don't really need to know too much about fundamental analysis. You don't need to know really too much. It's more so understanding what you're reading. Macro, I feel like macro, it's good if you're more of a long-term swinger, not swinger, but swing trader, or if you're more of a position trader, so you like to trade the cycles, which I've been way more successful trading bigger term cycles with the macro, or just understanding what the heck inflation is, GDP, all that stuff, GDP, inflation, ISM, leading indicators, lagging indicators, how the economy actually works. That's what that's going to tell you. Are you buying the dip on NIO? No, I am not. I am not because I think NIO, here's the thing about NIO. Let's see if I could pull this up. And this was last year. Let's see if I could search it really quick. I think it's under Tesla. Where is it? Let me show you something about NIO. Did I delete it? They're basically losing money. They're hemorrhaging money. So, and I don't really trust the Chinese stocks like that. Let's see if I can find it on here. Is this it? This is not it. But yeah, they're losing the most money. And you could trade NIO. I know a lot of people trade NIO. There's some big influencers who trade it. I think you could trade NIO if you watch the volume strictly off technicals, but I would never invest in it. I would never invest in it. Man, I got all kinds of notes. Yeah, I don't know where it's at, but it's basically showing you that out of all the electric vehicle companies, they're losing the most money off of their vehicles. So you got to be careful. But if I were to do some TA on NIO, right? We'll do some TA on this real quick. Where's that MACD? It looks like it's gaining momentum on the MACD. RSI looks weird. I guess I had it earlier. Let's see. Best case scenario, it starts to support 7, or not 712, but $7. It needs to hold $7. I don't trust it. I don't trust it. So you got to have a tight stop with NIO. Very tight stop. Let's go to that daily, see what it looks like. Yeah, it's below all these simple moving averages also. But there's some support here at, 702. Anything below 7, I would just be, you got to have a tight stop on this thing. Very tight stop, because it could just gap down to like 650 and just crush you. So you're probably best off waiting for a bounce. BRKB. Max, what stocks do you DCA for coming 10 years? I don't really do DCA. I do different. But if I had to put myself in that mindset, I like Palantir. Obviously Tesla, but I know people are like, Tesla's too expensive. Probably for the most people. But Palantir for sure. The market cap's not too big. Number one, AI. And AI is only going to get bigger. So I like Palantir. for sure. And then I would be more DCAing, or I wouldn't do DCA because of my situation, but I like crypto. Chainlink is my favorite. You guys already know that if you've been here. I like Chainlink the most. And then if we go to tech, Zoom's in a really good position also. Josh Brown started buying Zoom. A couple guys are buying Zoom. Zoom's in a really good position. It's only a matter of time before it breaks out. But if you're like DCAing, I mean, really, I like Ethereum. I like Ethereum for a DCA. BRKB. What is this? BlackRock. Oh, Berkshire. Okay. Oh yeah, Berkshire. Yeah, this is not a bad BCA. It's just not going to move as much as the Fed's balance sheet. You can put all these assets against Fed printing, and they don't beat the Fed. Only NASDAQ, which is like Apple, Amazon, Google, Meta, Microsoft. Tesla is down now, but Tesla also, there's probably some other companies that are good. Caterpillar is not bad. Has a monster trend, but I'd wait for it to come back into the trend. I like innovation stuff too. I'm a disruptive innovation investor. So I'm going to be more, prone to being in disruptive innovation. Coinbase is going to be great over the coming years. It just broke out. It needs to retest this level. But yeah, 10 years, my favorite thing right now is Chainlink, because the catalyst is insane. I've never seen such a big catalyst in my investing career than with Chainlink. What's about to happen here? Not investing advice at all. Just, I've never seen a big catalyst. They are partnering with Swift, which transacts $4 trillion a year in transactions. And you can think of this as capturing value through those transactions. They're partnering with Swift. They're partnering with DTCC, and they do about 2 to 4 quadrillion. No, I'm sorry, not trillion, quadrillion. 2 to 4 quadrillion dollars a year. So this is, right now we're seeing a secular trend. The banking system, the financial sector is switching or converting into blockchain technology. It's a superior ledger. They're not using Bitcoin or crypto necessarily as their ledger, but they will plug in to DeFi. So to connect, like the new internet, let's put it this way. The new internet is going to be a verified web. It's all going to be verified through blockchain technology. It can verify, it can quickly execute, tell you something's fraud or a scam. And that is the future, is a verified web. And what that means is basically, and this is an infrastructure too. So if crypto didn't exist, this would still exist. It's not necessarily a blockchain. It's blockchain technology, right? So it can go into anything, gaming, it's all smart contracts. DeFi actually doesn't work without this technology. So that's what I would DCA in, me personally, if I had to go back in time. Yes, I am holding Link currently, and I will show my position in the future. I'm just trying to, you'll see my position in the future with Chainlink. I'm going to have to use that to gain a little more, if you want to call it clout or credibility, because it's hard. There's so many tricksters and scammers on here, but you can't scam an investment. You can scam people on trading. You could take the opposite approach, but on investing, you can't scam people, because nobody's going to go short something. You can't short this anyway. You can't really short this anyway, but you'd get crushed after time. So I'm going to show when I first got invested in it all the way to the end of the cycle, and then you'll see my position in it. And then hopefully the next cycle we could top ticket together. You're currently, yeah, I am holding Link at the moment. You're the macro king. I mean, I'm not the king. I've just learned from a lot of people trying to make it simple, but I appreciate it. Trying to make it simple. I'd say my macro king is Raoul Pal from Real Vision. Raoul Pal, that dude has been he probably has the best track record of all macro guys in the system. And I like Tom Lee. I like Josh Brown. I like, see who else we got. The Compound's a really good resource if you want to learn the Compound. It's fun too. It's entertaining for me. The Compound's is is a podcast. And then, yeah, I like Raoul Paul. And I like, who else is really good at macro? There's a lot of macro dudes. And you never just believe one guy. There's Kathy Wood too with disruptive innovation. You never believe you don't just believe them. You just take what they say, you learn, you do your own research, you back it up, and you say, does this make sense to me? Is this logical? Is this where the future is headed? So with macro, you don't invest in what you see today. You invest in what is coming down the road in the next 12 to 18 months. That's how you do macro. Macro is not about today, which is why everybody was wrong about the recession. Raoul Paul said the recession is priced in back in 2022. Nobody believed it because they're like, no, it must come. But the market priced in very quick. NASDAQ dropped, 40%? Bro, that's pricing in a recession. S&P dropped 25%. That priced in the recession. Any chance of recession just didn't come. The recession that never came, right? So it priced it in and went up pretty quickly. They make entertaining. Yeah, they make it entertaining. I love Josh Brown. Love me some downtown Josh Brown. Yeah, he's funny too. He's a New Yorker. He's really funny. But yeah, those are the resources. But dang, this was a long stream. Anyways, yeah, just stay tuned. Let me see tomorrow. What do we got tomorrow? We have PPI tomorrow. We have Neil Kashkari speaking. It's going to be key to listen to what he has to say. And we'll see how this Bitcoin ETF plays out. I think we're going to get a pullback at some point. I might be wrong, but typically Bitcoin will try to break out and then really dump, and tries to break out and then it dumps somewhere and it'll probably get lower. It'll stop all the shorts out and then starts going higher again. So we'll see how that plays out. This really comes down to liquidity conditions. Is money supply coming back into the system? Is the bond market lower? And here's the thing, Bitcoin doesn't care about the US Fed that much. It's not just tied to the US. As long as Japan keeps printing, China keeps printing, Europe starts flipping, that means money supply in general goes much higher, right? And that's been the catalyst, in my view, for the entire cycle, is this global liquidity, global money supply indicator. So if you were reading my newsletters, you would see, that, here it is. This thing went up tremendously and it's on trend to start taking off again. So once it takes off, and typically liquidity picks up when you get close to recession, and we're dipping into recession, right? We are like, these are the slowest months in my view that I see the economy having. January, February, March. I think those are the slowest months we see. And then after that, it's rocket from there until the next cycle. Ticker on that global liquidity chart. Ticker is, actually, you know what? It's not even a ticker. You can go to indicators and then just type in global liquidity. They just created it. Global liquidity. You can favorite it. So you could just click on it and it's already there. You also have Fed net liquidity. And these are just other measurements of liquidity. But overall, if you look at all the central banks and the global money supply, that's what you have. And that's why the Japanese Nikkei is at all-time highs. It's at a 30-year high. The Japanese stock market is at a 30-year high because they've been pumping like crazy. Now, China, on the other hand, is different. They're struggling because most of their economy is real estate, and their real estate crashed. So Japan is not. Japan is much different. They're more of a producer. They do a lot of technology for how small they are. And so Japan's doing well with their stock market. Who's the creator of global liquidity? I don't know. I don't know who created that chart. You could just click on it and let me see. I think that's what you're asking. What a nerdy question. Who's the creator of global liquidity? And I'm not. It's not a put down. It's just a funny because I nerd out on the macro, but who's the creator? Where's the data? I don't know. You could find it on here. Who created it? I don't know who created it, man. Just put in global liquidity, Bukowski, and then it should tell you, because he might have created some other indicators too. So you could find something there. Pray for the shorts tomorrow. Okay. We'll be praying for the shorts. We'll be praying for the shorts. Let's see. Let's end it with this. Let's end it with this. Where's the stock market? Always use S&P. Most people watch SPY. Most people are watching SPY, but here's what might play out tomorrow. It's on the indicator chart on the right side, Bukowski. Here it is. I think you click this thing. It's not even working, bro. Come on. Read more. If you click read more, see, sometimes this thing messes up on me. If you click read more, it'll tell you. But a lot of strength here for S&P going into a worse than expected inflation report, but it is still hanging in. Still hanging in there. I don't think we get above 478 this week, which is only one day. Next week, I really doubt it. I really doubt it next week also. The range, this is also anchored VWAP that I have here. This is from the Fed, the last Fed meeting. So usually you get a shift in sentiment after the Fed meeting, and we did drop that level. We bursted out of it. We supported anchored VWAP. We're still supporting it. So we could just be climbing anchored VWAP. I think my signal here is go to the weekly chart, and I'm looking at the 10 week, 10 day, no, I guess it's 10 week, the 10 week moving average. And I think it's going to pull in once we get to this level. Maybe we drop it. I don't know. Nobody knows, but I think I'm looking for this. I'm looking for this support before we start to trend higher. You can see it was resistance prior on that pullback. It had support back here when we first started to rip higher to the summer. So maybe this will be a good indicator to watch at that level, right at that previous high. So check that out. All right, talk to you later. Catch you guys later. Next time, lift weights, eat healthy, try to improve every day as always. I need to work out tomorrow. I haven't worked out for 2 days. I've just been doing some warm-up stuff. So stay fit, man. You guys make sure you stay fit. Stay fit, improve, learn something new. I'm always learning something new, and I'll share it when I can. And most of all, stay blessed. Stay blessed. I'll catch you guys tomorrow. I'll be on here tomorrow.